Hello everybody, what's going on? Few important updates are coming from news, and a recent report which you may have seen circulating stated that NIO received an incredible 11,000 new orders in a single week. This isn't just a good number, it's a huge signal of renewed customer interest and operational momentum. Let's break down where that success is coming from. The report specifically called out two major contributors, the ES8 and the Onvo L90, with each reportedly pulling in 2 to 3,000 new orders. Now, this is where NIO strategies start to look really smart. You have the ES8. This is a flagship vehicle, the high-end premium SUV that put NIO on the map. It represents the company's luxury brand. It committed to quality and its unique battery swapping technology. The sustained interest in ES8 proves the core premium brand still has serious drawing power, and that's your high margin, high revenue generator. But then you have the Onvo L90. This is the game changer. Onvo is NIO's new sub-brand, and it's specifically designed to tackle the mass market and directly compete with players like Tesla Model Y and the domestic rivals. The L90's strong order book tells us that NIO's strategy to expand beyond the premium segment and capture a larger slice of the market is working. They are no longer a niche player, they are a multi tier automotive company. This strategic expansion is critical. It allowed the company to diversify its revenue stream and achieve the kind of scale that is necessary to drive down the cost and achieve better overall profitability. So the question here is that why should investors care about this 11,000 new orders? Well, in automotive world, order momentum translate directly into production outlook and ultimately revenue. This sharp spike in demand suggests a few things. First, effective marketing and product launch. The Onvo launch appear to be landing well with customers. Second, market confidence. Customers are willing to commit substantial money to the brand, indicating trust in the product and company's long-term viability. Third, positive guidance potential. If this momentum continues, it lays the groundwork for NIO to potentially raise its future delivery guidance, which is always a major catalyst for the stock price. Of course, the key going forward is execution. NIO has to successfully ramp up production to meet this demand, and they have to manage their margins as they scale the Onvo brand. The journey to consistent profitability is still ahead of them, but these orders are the fuel for that journey. The EV sector is without a doubt a competitive battlefield, but NIO is building a sustained multi-phase business model centered around innovation, specifically with its battery as a service and battery swapping stations. This recent 11,000 order milestone isn't just a flash in the pan. It's a tangible evidence that the company's strategic pivot, the triple brand approach, the expansion into the mass market segment are paying off. It shows that the market is willing to embrace what NIO is selling. For those watching the stock, these delivery numbers are the lifeblood. They provide a clear positive data point in what has often been a cloudy narrative. It suggests that the worst of the delivery slump could be behind them and that they are now firmly on a path of accelerated growth. This is a company that found its footing and is building serious momentum. Keep an eye on those monthly delivery reports because if they look anything like this week order intake, NIO is poised for a very interesting ride ahead. So get ready for it. With that said, thank you so much for being here. See you in the next one.